Hi, my name is Neeraj Varma. I'm a life insurance broker in Calgary. I've lived here for over 24 years and all my kids were born and raised here. I also own a house in Calgary. I remember when my wife and I first moved here from Edmonton, we were young and didn't know the city very well. So we rented an apartment for a few years. We worked hard, we saved up some money and finally bought a condo. We didn't have the entire down payment required, so we had to borrow some money from relatives. Buying the first condo was a big achievement for us as a young couple starting out in life, just like it is for everyone. For most of us, our home is the biggest asset that we own. We work hard to acquire it, and we continue to work hard to pay the mortgage and maintain it. But it doesn't stop there. After being in the condo for a few years, we eventually bought a bigger house, and of course, we got a bigger mortgage. It's normal for people to move at least 4 or 5 times in their lifetime. Each time they move, they buy a house, they get a new mortgage. Most of us are likely to be paying on a mortgage until the age of 65 or longer. This is what happens in normal circumstances. But life moves quickly, and sometimes everyday risks that we believe only happen to other people happen to us. According to statistics published by the insurance companies, there is more than 45% likelihood that a male or female age 40 will experience a period of disability, a critical illness, or even death before the age of 65. While physical and emotional recovery is difficult enough, the financial impact of an unexpected disability, illness, or an early death can be devastating. If we lose our ability to earn an income, we could lose the house and cause chaos for ourselves and our children. That's when we really need a backup plan. We need a plan that will guarantee the security of our family when the worst happens. This is why it is important to buy mortgage insurance when we buy a house. In the process of getting a mortgage, your mortgage broker or lender will ask you to buy life insurance to protect your mortgage. When we sign on the dotted line, we assume that the bank has our best interest in mind. Unfortunately, there are details in their contract that are not in our best interest. What your bank is actually offering you is a plan to protect the bank's interest in your house. The bank wants to get its money out in case you die. Most banks don't offer a solution if you get critically ill or can't work in your job due to disability. In either case, you probably don't have enough money to pay out the mortgage, and even making the mortgage payments may become impossible. The bank doesn't want to deal with that. That's why they try hard to get you to sign up for their mortgage insurance plan. The way they present it, it sounds like a win-win situation. If you can't pay off the mortgage, the insurance company will take care of it for you. But here's the problem. With most lenders, your mortgage insurance is part of a group policy where the lender is the beneficiary, not you or your spouse. As the mortgage gets paid down, the insurance amount goes down as well, but your insurance payments stay the same or go up every few years. In many cases, insurance doesn't cover the bank fees, so you may still owe the bank money after the insurance has paid out. Where's that money going to come from? If you switch lenders, you will lose your insurance coverage, and if your health isn't top-notch, there is no guarantee you will qualify for mortgage insurance with the new lender, and that is reason enough to prevent you from getting a mortgage. It happens. I've seen it. My friend had health problems that made him uninsurable by their plan, and he didn't have another insurance policy, so the bank refused to give him a mortgage. On top of all this, the bank can raise your premiums at any time or cancel the policy whenever they want. I don't know about you, but that doesn't make me feel very secure. The good news is that some of the top insurance companies offer an alternative to traditional bank-based mortgage insurance. The new insurance plans guarantee your premiums will stay the same until the age of 65. The insurance amount will also stay the same as the mortgage gets paid down. This means you will get some extra money when you need it most. Since you own the policy, nobody can take it away from you or change it on you as long as you're making your payments. It covers disability. If you're injured or sick and can't work, the insurance company will give you money that you can use to make the mortgage payments, or you can use the money any other way that you want. These new mortgage insurance plans also cover over 20 critical illnesses like cancer, stroke, heart attack, blindness, kidney failure, Parkinson's disease, multiple sclerosis, and more. You will get a lump sum of cash that you can use to get treatment or for any other purpose. You decide. Death is also covered. If you are not there to look after your family, you can rest assured that there will be enough money to pay off the mortgage so they will continue to have a place to live. Isn't that a better way to protect you and your family? All three major risks in life are covered: disability, critical illness, and death. And the policy is fully under your control. If this makes sense to you, the next step is to get a quote and find out if you can qualify. Yes, unfortunately you do have to qualify. Not everyone can get this. For more information about this plan, click the link below this video or call 587-315-5078. Call now, 587-315-5078. If you're going to be paying for mortgage insurance anyways, you may as well get something that will protect you when the worst happens. Call now, 587-315-5078.